In part 4 of our new venture roadmap to successfully start up your trucking company, we will discuss insurance. Not just what coverages you need, but how you can start building a good safety record to help you keep future rates as low as possible. With that said, and a lot to cover, let's get in the loop with Luke and dive in. As a new carrier, you can expect to pay much higher insurance rates since you do not have 2+ years of safety experience under your DOT number. These higher premiums will impact your profit and monthly cash flow, which we will cover in the next video, so stay tuned. So what can you do now to help keep rates as low as possible as a new trucking company? Well, it's pretty simple. As a truck driver, the earlier you can build your safety history, the better underwriters will measure the risk when they insure your new business. The best thing you can do now are have a good credit score, have no distracted driving tickets, speeding tickets over 25 miles per hour, or at-fault rear-end accidents. Have no auto insurance liability or physical damage claims while an employed driver. Have CDL experience for at least 1 to 5 years. Have your license in the same state you reside in, and establish your business in the same state you reside in. We mentioned this earlier in the series, which you can watch fully by clicking the card above. While these are important, your MVR or motor vehicle record has the most significant impact on insurance premiums. For example, if you get 2 or more speeding tickets or other moving violations in a 3-year period, you can count on a rate increase at most insurance companies. A motor vehicle record is a state-specific document that shows your driving history within that particular state over a period of time. Typically, MVR reports show 3 years to 10 years of driving history, such as accident reports, driver restrictions, civil traffic violations like speeding and running a red light, license suspensions, vehicle crimes like DUI, reckless driving, and leaving the scene of an accident, unpaid summons and insurance lapses, or number of points in states which use a point system. If you have a history of issues on your MVR, you can change your driving habits today and wait to get your authority until the violations drop off your MVR. Within 3 years, most speeding tickets will fall off your driving record and then may qualify you for a safe driving discount if your insurer offers one. Lastly, if you have a history of insurance claims in either commercial or personal vehicles, it will be immediately evident with adverse and severe implications on your commercial auto insurance premium. When it comes to commercial auto insurance, both liability and physical damage insurance claims are viewed through 2 lenses. 1, all paid claims are considered an accident, even if there was no police report. And 2, the higher the amount paid to settle the claims, the higher the risk for insurance companies. While safety history is a start, your business reputation is also critical. To build this up before you start your company, you must think about your credit score. Simply, a higher credit score means better ratings. The theory with credit is that if you manage your personal financial affairs well, you are more likely to take your driving and safety seriously. So be sure to pay your bills on time, including mortgages or rent, credit cards, auto insurance, and car or truck payments. Another way to keep your credit score high is to make sure your credit utilization rate is below 30% if possible. For example, if you have a credit card with a $10,000 limit and a $5,000 balance on the card, your credit utilization rate is 50%. This means making sure you pay down any credit to below 30% of your total credit limit available to you. In this example, you want to have just $3,000 on your card and constantly keeping on-time payments. Otherwise, another option is to ask for your credit card limit to be increased on a credit card or two to quickly make that credit utilization rate lower. This means increasing the credit limit from $10,000 to $15,000. So if you have $5,000 on the card, your utilization rate just went from 50% down to 33%. There is much more to consider with your credit score. Let me know in the comments if you want a video talking in depth on managing your credit score report. With your safety and business management story starting to be written, you are ready to obtain the correct insurance for your company. As a commercial motor carrier, there are different types of required and umbrella or extra insurance coverages you will need. These include primary liability, cargo insurance, physical damage, non-trucking use or bobtail insurance, underinsured or uninsured motorist insurance, workers' compensation insurance, reefer breakdown coverage, and more. Let's discuss each one. Primary liability. It is important to keep in mind your legal requirements. Trucking insurance is mandatory in all 50 states, and not having proper insurance could cost you pricey fines or your license. To stay legal on the road, you're required to have primary trucking liability insurance of at least $750,000 worth of coverage. But most brokers won't give you a load unless you have $1 million worth of coverage. Non-trucking or bobtail liability. All time spent in a truck is not billable, but it is insurable. When you use your truck for non-business purposes, you need insurance coverage. Non-trucking liability offers liability coverage for property damage or bodily injury to a third party when trucks are being used for non-business purposes. Cargo insurance. In addition to covering your vehicles, it is just as important to protect the cargo that you are hauling, whether it is yours or a client's cargo. Truck cargo coverage ensures the contents of the trailer, temperature control machinery, and other appliances or accessories that keep cargo secure. Coverage is custom evaluated for the type of commodities hauled and the requirements of the shipper. Here is a list of all risk and broad form policies to consider. Reefer breakdown, loading and unloading, debris removal, pollution cleanup, aggregate deductibles, earned freight charges, and high-valued commodities requiring limits of $250,000 per vehicle or more. Physical damage insurance. Anytime you drive, you are exposed to risk. Your truck could be damaged in an accident or from another disaster. It could be stolen or vandalized. Any of these issues could put your truck out of commission and compromise your business. Physical damage insurance coverage is not required on your truck unless your vehicle is leased. If it is, then you are more likely required to have physical damage insurance. On the other hand, if your vehicle is fully paid for, physical damage coverage is optional. However, it offers 24-hour collision coverage for damages to your tractor or trailer. Collision, comprehensive or specified perils, aggregate and combined deductibles, rental reimbursements, gap coverages, personal effects for drivers, towing coverages, electronic equipment coverage, and downtime loss expense. Workers' compensation insurance. If you have one or more employees and do not carry workers' compensation insurance, you will be liable for these costs and additionally be subject to fines and fees based upon the state your operation resides in. Workers' compensation insurance protects your employees and your business from work-related illnesses or injuries. The coverage is mandated by each state, and the workers' compensation laws and benefits vary by state. If trucking workers' compensation insurance is mandatory, it can provide coverage for medical expenses, rehabilitation, death benefits, and missed wages. Employees filing claims for workers' compensation insurance can only do so if their injury or illness is caused by their duties while on the job and often include a slip or fall, a strain of the body from heavy lifting, injuries that have resulted from an accident while operating machinery, and more. The injured parties must visit a healthcare professional immediately so a medical doctor can provide medical reports to support any claims. Upon approval of the insurance carrier, the employee will receive compensation payments and can return to work when cleared. Fleet owners who lease on to motor carriers sometimes need to offer workers' compensation coverage for their employee drivers. Owner-operators have the option to purchase their own coverage called Occupational Accident Insurance, or OAI. OAI is used for medical benefits and disability coverage in the event of an injury on the job. This coverage option typically costs about half of a traditional workers' compensation policy coverage cost. It will not have all the benefits that workers' compensation coverage provides. Okay, you made it through. Good job. If you are looking for an insurance quote or have questions, then look no further. You can get a quote from CNS Insurance by clicking on the link below and fill out the form. Part 5 of our roadmap to success is managing cash flow. Stay tuned, it will be here before you know it. Did you miss any of the previous roadmap videos? Check them out in the startup playlist, or need another option? Check out this video as well. And as always, stay safe out there.